Will the RBA cut rates at its May meeting? And how might this affect house prices? This is something that almost anyone who either owns a property or is looking to buy a property is asking at the moment. And of course, if you're interested in property, well, on behalf of a client, I'm bringing a property to the market right now. It's a 2 to 3 bedroom apartment right next to Barangaroo in King Street Wharf. It looks directly over Darling Harbour with direct harbour views, with a recent relatively modern renovation. It's a great property, but it's time for my client to move on and just look at other things to do with their cash. I'll include a link to that in the description below when the link goes live. Nevertheless, let's talk about interest rates. I recently sat down with Mibui of AMP to discuss what the RBA is likely to do. And here's what she had to say.
So we expect three more cuts in this cycle. So that would take rates to about 3.35%. That's actually still higher than pre-COVID. I think the era of low rates is probably over in the next 10 to 20 years. And this is not just Australia, this is globally as well. Just given that we probably will see, more government spending in Australia and in a lot of Western countries, given the political appetite, given the demographics, given more needs for government to spend on defense, for example. So the rates environment will probably settle at a higher level compared to pre-COVID. But for now, we do see three more rate cuts by early next year to 3.35%.
It's probably going to be a sigh of relief for anyone with a mortgage or potentially going out and getting a mortgage. Do you see that having much of a housing impact? I've seen mixed reports on that type of thing. So on the one hand, obviously lower rates mean the cost of capital goes down, but on the other hand, prices are already very high relative to wages, meaning the actual room for up growth at the moment might not be high. So any thoughts about how that might impact things?
I think all of those opinions are actually correct. So on one hand, I do think the Australian property market has surprised me a lot of its strength. Every year, every few months, you see some commentators on the internet saying that we are in a bubble. This bubble has to burst. But no, time and time again, you still see house prices going up. And it did have a little bit of a shallow downswing earlier this year, before February, before the RBA cut rates. But the fall was a tiny bit, 0.2, 0.4% per month. That was basically negligible. You probably wouldn't even feel it. And this is in spite of the fact that if the RBA cut rates by 25 basis points on an average mortgage, on an average home, it only cuts payments by about $100 a month. So it's actually quite minimal. So I actually don't see the housing markets actually falling despite these affordability constraints. But that being said, though, I think affordability is definitely at roughly a historical low right now. Say, for example, the time to save for a deposit for a median home in Australia on our analysis on a median income is actually about 11 years. That has more than doubled from 30 years ago, from just about under 5 years. So affordability is definitely going to be a constraint in the near term, and we do see house prices going up, but at a slower pace. So our house call is for 3% of house price gains this year throughout Australia, compared to the 5% that we've seen over the past few years.
Yeah, what I'm seeing at the moment, or predicting to some extent, is increased liquidity, but not necessarily significantly increased prices. Because of what we've talked about, there's just only so high the prices can really go. But I've noticed that particularly in CBD apartments, so Melbourne CBD or Sydney CBD, liquidity isn't great. I.e., it takes a very long time to sell properties at a reasonable price. And I've noticed that some pockets, like CBDs, have increased at a much slower rate than, say, just on the periphery of the centre of the city. It's sort of interesting observing in Australia the different pockets and how they change with affordability.
Yeah, I do agree with you. I think there's no single national housing market. So you've seen Victoria perform a lot worse in terms of, housing price performance over the last year compared to states like Western Australia or Queensland. It's crazy to me that if you see median house prices, Brisbane is actually above Melbourne, which doesn't make sense. I think it all comes down to the question of supply and issue. So Melbourne has definitely had an oversupply relative to population growth. They've had lower population growth. They've had negative interstate migration, say compared to Queensland, for example. but they've had a lot of supply in terms of CBD apartments. So I think that really does explain why they've been performing worse in that sense.
It highlights one of the issues that I often think is overlooked in the affordability debate. In that, say, for example, you were to go and have a $100,000 deposit, you buy $1 million house for the sake of argument. So often you'll need a 20% deposit, but just use round numbers. Then that house falls 10% back to 900K. Your net worth went from 100 to zero. So sometimes the affordability debate misses the life cycle aspect of it, which I think a number of people in Melbourne are maybe experiencing at the moment.
Yeah, so that definitely fits into like the negative spiral sentiment of housing in Victoria. I think I agree. I think this is very different from the US. So when I worked in the US working in RMBS, the difference is that a lot of people can just walk away. They can just not pay the debt because the mortgage debt is non-recourse in a lot of states in the US, whereas here I think there's a bit of limiting aspects to this is that debt are still recourse. So you can't just walk away from it. You still have to service it. And when we have a situation when rental vacancy is actually extremely low right now, it's also a bit harder for people if they are homeowners to walk away from their homes as well. They still need a place to they still need a roof. So maybe this will probably affect the investor base in Victoria a little bit more than the homeowners.
Yeah, I think one of the issues in Victoria is the dramatic increase in land taxes as well,
Yeah.
which caused. I haven't followed as much the construction aspect of it, but I suspect that supply is not coming online as fast as it was. But I suspect that that's going to perhaps create issues in Victoria going forward as well. I know a number of investors who have regarded Victoria as, at least at the moment, uninvestable. I'm not sure whether that's something you've seen as well.
I've seen that sentiment from bank brokers at AMP actually. People does seem to want to actually sell in Victoria, not just Melbourne. But I guess this is a question for the broader home ownership base in Australia as well. Is that a good thing or bad thing if you want to buy? If you're fine with buying an apartment to live in Melbourne CBD, maybe this is a good time for you to get into the market.
Yeah, there's always sort of opportunities that spring up. It's sort of a matter of what I found in Australia. And it would be interesting to hear your thoughts having worked in the US and in Australia. But what I found in Australia is that often wage growth here is sluggish to non-existent. So you really need to be getting into investing as soon as possible and as much as possible for you to have any real chance of getting ahead. That's what I've observed personally anyway.
I do see that mentality playing out in Australia. So one thing I noticed, like literally from the first year I came here, is that people love talking about housing market. You go on the bus, you see people talking about it. People do see housing market as a way to gain wealth, which is definitely different from income. So we've been doing a lot of videos on this. So there's definitely an issue with the tax system in Australia is that we do punish income earners a lot. So 62% of the government tax revenues are from individual and corporate taxes, rather from some other sources, say, for example, the GST, for example. So that put a lot of burden on the income earners who might not necessarily have wealth. So people like me say, I came here, maybe I get a good paying job, sure, but does that mean I'm rich? No, because a lot of that goes into the really high marginal tax rates. So how do you escape this thing? So you try to use the housing market because you can leverage it. So that's the best way to leverage as an individual. You also have these tax concessions on in terms of the housing market so that you can hide a little bit from that, say, for example, negative gearing to offset some of your really high marginal income tax. If you look at who uses negative gearing the most in Australia, I've seen this chart from the ABS a few years ago. Those are actually people like surgeons and doctors. So basically people who have really high income in Australia. So I think that is definitely a really dire situation that I'm not sure if any single political party in Australia wants to solve it right now. It probably requires a major crisis or a major bipartisan push to actually solve this issue.
So there we go. It looks like the RBA is going to cut interest rates by 25 basis points. And it also looks like the cash rate is likely to go down a full 100 basis points throughout 2025, a full percentage point cut from the beginning of 2025 through to the end. Now, in terms of house prices, well, of course, it does look like this is going to be supportive of house prices because an interest rate cut always does. However, there's a limit to how high prices can go given the very sluggish wage growth, particularly at the top end, and particularly the high taxes that really undermine the benefits of that sluggish wage growth, such as it is. There had been a small prediction I'd seen of a 50 basis point cut, but I don't see that as being realistic. I doubt the RBA, given its objectives and given how it tends to function and its general caution, is likely to cut by 50 basis points rather a major crisis. Like I've said, my client is looking to sell their apartment. I'll include a link to that in the description below. Like I've said, it's a great 2 to 3 bedroom apartment right next to Barangaroo, easy access to everything, direct water views. It's a great apartment. I'll include a link to that for you to check out. But otherwise, let me know your thoughts about interest rates in the comments below, and hopefully I see you next time as well.